What's up, everyone? So this is going to be a quick review of another great session. This is again London session. So coming into the charts today, I actually began by opening the 1 hour chart. I had not looked at any other chart. Let's just remind ourselves of what happened on a weekly. Remember the levels I told you in yesterday's video. I'm not going to repeat those levels. We were targeting this previous weekly high, which we took out, I think, yesterday. And then coming on to the daily. So today I have this previous day's high, previous day's low. I have this daily order block right here. And I also have what? I have my levels already marked out on my charts like you see. Okay. I have the consequent encroachment of this week, the midpoint. Now I went straight down now. When I have those levels, I don't mind about those levels. I trade my own model, but those levels guide me. Going on to 1 hour, we have this. You should have this indicator. It's called the ICT New Week opening or New Day opening up by Fadi. This one here. These are my settings for the indicator. This is it. In case we gap higher or lower. So when we opened, we gap lower, meaning that we're having a bearish intention as of Tuesday. Now, when this happens, ICT tells us to wait for price to come and test this gap and see if we start to displace lower. If we start to displace lower, then there will be a bearish day. Check out these lows and probably after this gap or even after these gaps and previous days low. We may not reach there. Someone was asking which indicator I use for SMT. There is this indicator called the, which is the out of options. Just put in your trading view, just come and put out of options. Out of, you don't have options. So here, SMT divergence version 2 by out of options. This guy makes some really cool indicators. And now, going on to 1 hour, I put this is 12 a.m. high, 1, 2, and 3. After I had done all my analysis, I know that this hour, see, we displaced lower. Probably we may drop low. We can't tell. So I had all my analysis and my charts is from yesterday. Ignore it. So today, then I shift my focus to the 1 minute time frame. Okay. On 1 minute, what am I looking for? There are specific things I want to look for on 1 minute. Okay. Now, I realized that 1 a.m. opened here, tried to go low, then immediately rejected, and it came until it tested this new day opening gap. Okay. This new day opening gap was on electronic trading hours as of yesterday. This is in regular trading hours. So when we reached this gap, tested it, there are things I want to look for. Time. What time did you reach here? Okay, we're at the chart right here. We reached at 1:30, exactly at 1:39 here. So there are things I watch for. I started watching. I want to see, do we start to displace lower from this gap? Or do we displace higher? So as I was on the charts, I saw this bearish candle and tried to come up here, but left a very tiny gap. And you know, by this time, the volume has not yet come into the market. So you just keep waiting. Now, as I was step reading this first gap, immediately saw this reaction from this level, from the new day opening gap. This level I'm talking about here. Look at this reaction. I was still bearish today and holding on for highs. Could happen, but no risk. So now, once I saw this reaction here, immediately no, at least we would sell short and reach this level. I sold right here. Went short right here. Going short, my target was way below because I was aiming for this 1 hour gap, and then also look at this 1 hour inversion and probably lower up to the Asia lows. So that was my target for the first trade. But it's good to set and forget. Notice that we started to displace lower. I kept gauging momentum. Displace lower, the up candles, and we started to displace lower and lower and lower until we started to displace lower as I was measuring these gaps. Now, when we reached here, we literally displaced through this displacement and this candle. I entered full position. I went in full because I first used 5 micros. Now I went full 20 micros. Those are like 2 contracts. Now, having gone full, my stop loss was now here, and my trade was running at I went full margin right here. My stop loss was here with a stop loss of $250, and the take profit was way below here. Okay. Now, once that happened, now this is what I gauged these gaps as I was waiting for 2 a.m. As you know, 2 a.m. in London open. I want to be a liquidity hunter. So London opens, it takes out people who had failed their stops below. Now, when this new hour opens, I am looking at 2 things. Do we form a Judas down, go higher, or do we form a Judas up, go lower? Now, the first 5 minutes in the hourly open, you want to stay out. Look at there. This candle was black, tapping sellers, tapping buyers. After 5 minutes, it will gauge your momentum. So when this gap was formed, this gap right here, immediately this gap formed, I was in the negative $400 loss. I just cut my loss because I didn't want to what? I didn't want to what? Be trapped in this case. And then I attempted to go along here, but then this was wrong. My emotion took over. Then I realized that I exited because of this gap and this reaction. So next time you have to wait for a gap. Once this drops, it has to close below with 1 candle, not these multiple rejections. So I realized the time was 2:07, and by 3:10 the price action will show you where it wants to go. When I saw this rejection with this candle, the moment this candle closed, 1, 2, I was waiting for a gap. The moment this candle closed like this, I waited this one to return. The moment it ended, I went full margin. Full margin with all my contracts. My stop loss was below candle high. I was losing like $300 and I was making like 2,000 up to I think this level. Yeah. So by the time I was in this trade, from here, this candle came up. It was bullish, immediately rejected. I held. I was like, this is it. These are the things I want. Feedback from the gap, immediate reaction. If I wasn't in the trade, I would go full margin and put my stop loss way below here. And I know it is two. This trade will drop. So I exited all my positions around here. But the trade went, it dropped more. Now look at this. Time-based entries and exit. This move which starts at 3, you should be there too. You should be out by 2:30. Look at 2:30 here. Immediately 2:30 reached. Immediately 2:30 reached. What happened? It started to reverse. Now 2:30 reached. It created this gap, but we have area lows below here. So now I immediately didn't long this market. In fact, I sold here to complete my trading combine because I was left with $7. I sold here, exited at $7. Now the next hour at 3 a.m. opens. Look at this open. We tap this 1 hour inversion gap. Maybe let me just go to 1 hour and you see. We look at this gap here as an inversion gap. When you go to 1 hour, that is what I was talking about. Now let's go back to 1 minute. Immediately we open. Now these are instances whereby we will not have a Judas swing. Our Judas swings. You should be fully attentive on what price action is doing. And you should have your targets and expectations lowered like today. I had higher expectations. There was it. I thought I was taught a good lesson. I gave up on my one accounts, all my profits for today. So I'm up to $100 only, and I've been locked out because of the daily limit loss. I trailed my limit loss. So 3 OM opens, it tests the inversion and immediately drops. What am I waiting for? Instances where we don't have an hourly data swing is when we have a key level up, we drop and wait for this gap. The moment this candle closed, I went short. I went short here. My stop loss was above this gap. Where did I go short from? Yes, short. I think I went short when this candle was coming because I was liking the momentum. I didn't wait for it to close. And my take profit, I extended it. I wanted it at least here. I was not targeting liquidity. That was my mistake. Now, next time what you want to is, you want to wait for the second gap to be created. If the second gap is created, wait for 7 minutes. I saw the first 5 minutes, ignore, don't enter a trade. Once I saw this candle, and any other day I would sell this market. And stop losses should be above this high. And take profit should be here, but see this risk reward was less. And I was aiming a little bit low, so that was my mistake today for the sell. And even I said, look at this sell confirmation. If I would be short this market from this gap. You look at this gap, the reaction from it. If you trade this, I would be selling short to Asia lows. My stop loss is just up here. I will sell short on this because it is 10 minutes past. But this is a tricky hour. The price can chop. These are the things I look for in price action. If my account wasn't locked, I would be in this short. This is live price action. I would be aiming for the Asia lows. This is how I read price action. Like you want to wait for 7 minutes. Look at this. We opened here and exactly 4:07 we came back and rejected. The same thing here. We opened here, came back at 4:07, we rejected. You see how the algo is timed. 4:08, 4:38, 8 minutes. The rejection started at 8 minutes past. Rejection started at 8 minutes. This algorithm can be timed. But my stop loss is safe. This trade. These are the things I'll be looking for. And because we have not yet taken Asia lows, and that's why I didn't want to take this long at 3 a.m. So this short, this kind of took me out on this first trade. I think I moved my stop loss to way below here. Took me out, I entered again. Because I was confident, I entered shorts as this candle was turning. And I Stupid me didn't take profits. Next time, not. So that's it for London session. This long, personally, I wouldn't take it. I would have waited for till 3:30. What is 3:30? 3:30, no Judas swing down, no trade, no displacement. So, it's a good trade. So, I think I'm improving in the way I look at price. And this is good progress. I hope you learned something. Have a good day. I'm done trading for the day. Maybe I'll be demo trading in the rest of the land. So if this was live account, it would be good to reduce your risk to this point now. Because we've broken above this, we expect coming to 314. By 315, we should be in real profits. Otherwise, it can reverse on you from this level. I think that's it for now.